Welcome back, everyone. We're now at another episode of Debits and Credits with Haas and Dawe, and today we're going to talk about a recipe show, a recipe on how to start your own escrow company. Maybe not as exciting as a recipe how to bake a cake, but the results I think will be more profitable and more fruitful than the cake when you have your own escrow company and it's up and running. So we're going to talk about, again, going back to the Department of Financial Protection and Innovation, commonly known as DFPI, and getting a license as an independent escrow company in the state of California. Now, we want to make sure everyone understands what we're talking about today. It's not legal advice, and it's nothing um, as far as the gospel on how to do everything perfectly. It's for discussion purposes only, and to share the perspective from our perspective, the process of what goes on in trying to start a new escrow company. And there are a lot of people to work with, and not just us as a CPA firm. There's a whole team involved. There can be an attorney, and we recommend attorneys who work with escrow companies. And there can be outside consultants who work, again, are very familiar with the escrow world and work with the escrow world all the time. And this is something as basic as in the formation of an escrow company. Now, under the state code, the escrow company has to be a corporation. It can't be a partnership. It can't be a sole proprietorship. It can't be a single member LLC. It has to be a corporation. And whether it be a C corporation or an S corporation, those are tax concepts. That's another decision to be made relative to the process, but that's not a requirement of the department either way as to what type of corporation from a tax perspective. But the entity has to be a corporation. Now, why I keep talking about this is when you form a corporation, there's going to be a registration with the Secretary of State of whatever state you're going to be in, and there's going to be articles of incorporation. Now, normally when you go to the Secretary of State website, you can start your own corporation and you can generate a very generic sense of articles. And one of the pieces of the article of incorporation is going to be, what kind of company are you? What's the purpose of the company? And there's commonly a very boilerplate explanation of being a general corporation in the state of California, blah 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 blah. And then you submit it to the department with your application, and they will reject the articles of incorporation because the articles of incorporation have to say specifically that the purpose of the corporation is to be a licensed escrow company in the state of California, licensed independent escrow company in the state of California. That has to be part of the articles of incorporation, or the DFPI will ask you to amend the articles, which delays the process for getting the application. Another item you're going to be getting at the point of formation will be a tax ID number. Now, when you register with the Secretary of State, you'll get a California state corporation number. But you want to get a federal tax ID number, commonly known as a TIN, a TIN, or an FEIN, a federal employer identification number, or in between, just an EIN. And when you go to the IRS website, it allows you to get this EIN, this employer identification number. Whether you have employees at the beginning or not, you still will get this identification number known as the employer identification number. You can do it online yourself. You can have us do it for you. You can have your attorney do it for you. So anybody can help with the process. And trying to do it online is more efficient than submitting the form. Now, with the IRS, Internal Revenue Service, there's a form called an SS4, SS-4, and that's the application for the employer identification number. It has the same questions that you have online. The advantage of doing it online is you can get your number right away. If you do it using and mailing in or faxing in the SS4, it could take 2 weeks before you get your number back, if not longer. And so you'll have a taxpayer identification number. Now you need that because you won't be able to open up a bank account without the tax ID number, let alone file a tax return. Now, again, part of the process or the requirements of getting an escrow license, you need to have a bank account and an operating account where you're going to put your initial capital deposit into the bank on behalf of the company. You'll also be opening up an escrow trust account, but that can be done later. There's no reason to fund an escrow trust account or do anything with the trust account until close to the time when the license is going to be issued. Now, a lot of times when you start the process, you may open up both your operating account, also known as a general account, and the trust account at the same time, but you're not going to fund the trust account until you actually have escrow transactions. Now, the initial capital deposit that goes into the operating account needs to be sufficient so that when your financial statements are submitted to the department relative to the license application, that you're in compliance with the net worth requirement. Now, the department requires tangible net worth of the escrow company always be greater than $50,000. And if you have more than one location, or if you're going to apply for both a license and a branch license at the same time, there's more capital that needs to be than just the $50,000, because the net worth requirement goes from 50,000, and if the first location there's another 25,000, so now you're at 75,000, and for every branch location thereafter, it's another $12,500 of tangible net worth requirement. So we recommend that the initial deposit when you're trying to open your escrow company be at a bare minimum of 60,000. Usually the common recommendation is going to be 75,000, but in some instances people will want to put in $100,000 of capital, depending on what they're going to be looking to do with the company and its opening deposit. So capital will go into the operating account anywhere from 60,000, let's say, to $100,000. And then we recommend that this capital go in, and we come in, or whoever is being selected to do the audit, the opening audit for the company, um, right at the time the capital goes in. It makes it easier to do the opening audit. There's less transactions or less activity we have to look at, and it makes the process a lot easier for you, because after the audit, our opening audit is submitted, then you can go and start spending some of these funds for some of the fixed assets, for software, for computer, furniture, other items within the company that are going to be needed. Also part of the application for the license with the department is fingerprinting and background checks. Whoever the owner or owners are going to be, that person needs to be fingerprinted, which can be done with a live scan process at local outlets that allow you to do that. Commonly, a sheriff's office will do it, but there are now other outside services that will allow you to do live scan and get the live scan submitted to the department. And a background check. What the department does with all prospective owners is they send out background checks along with the fingerprints to the Department of Justice to make sure that a background check is done on whoever the owners are going to be. Have there been any criminal, felony activity against this person's record? Do the fingerprints match and check out, and so on, to make sure that the person applying is cleared. Also, part of the process for the application is an escrow manager. An escrow manager has to have at least 5 years experience on a desk as an escrow officer. It can't be experienced just as an escrow assistant. And so the escrow manager has to have at least 5 years experience. If it's a branch application, the escrow manager only needs 4 years experience. But the department will be checking on this experience. And so what they'll do is, as part of the application process, they will send out a verification of employment, commonly known as a VOE, to where this escrow manager previously worked, or the escrow manager being applied for previously worked, to verify that there have been at least 5 years, has been at least 5 years of experience on a desk. Now, there also needs to be an escrow surety bond. The surety bond is something that protects the department in case of a takeover of the company, where the department can go against the bond and collect the coverage to cover the cost of shutting down the company or clearing up messes within the company. And so 99% of the time, the lost payee of the bond is the department, is the DFPI. And what's also different about a surety bond versus, let's say, a fidelity bond, or a business office policy, a workers' compensation policy, a surety bond has a guarantor to it. In this case, it'd be commonly the owner of the escrow company, or the proposed owner of the escrow company. And the surety bond has to be at least a $25,000 bond of coverage, not the premium, but $25,000 of bond coverage, to start. And as the trust account gets larger, the surety bond can go from $25,000 to $35,000 of coverage, and up to a maximum of $50,000 of coverage. With the caveat being that for a branch location, if there's any branch locations, the surety bond goes up by an additional $5,000 per branch. Now, With the surety bond, again, it has to be in place, and there's specific language how the bond has to be issued, and it's in the financial code how that bond is worded. Now, this is something else why we recommend that you go with an escrow attorney or an escrow consultant, because they'll make sure you get to a bond company, a bonding company that knows how to write the bond for the escrow for the escrow surety bond to make the DFPI happy. Now, if you're going to be doing escrows that are like holding escrows or personal property escrows, where um, you need additional coverage to protect the trust account, then you need to have an escrow fidelity bond required as well. And the fidelity bond is based on how much coverage you think you'll need relative to the size of the trust account. And this is an outside insurance policy. Because normally there's this entity called Escrow Agents Fidelity Corporation. And Escrow Agents Fidelity Corporation is a government corporation that was started back in 1983 because of an insurance crisis going on that was making it difficult for escrow companies to get affordable insurance coverage. The Escrow Agents Fidelity Corporation, known as EAFC, basically protects the trust funds of the escrow companies by buying a fidelity bond for the entire escrow industry. It also has a $5 million basically fund that's around to act as a deductible for the fidelity bond. Now, what EAFC protects is if there's any embezzlement or shortages within an escrow trust account that are caused by the bad acts of an employee of the escrow company, not by the ownership, but of an employee of the escrow company. And as part of your application process, you will need to send a $3,000 refundable deposit to EAFC, along with an application to EAFC for them to approve. And what EAFC will do is it will once it receives the $3,000, it will go through the application, and if it approves the prospective owner, what it will do is it'll notify the DFPI that the company is in compliance with the EAFC requirements, the deposit has been received, and the DFPI can move forward knowing that EAFC has approved this applicant. And like we talked about before, there's an opening audit that's required, and we would perform that opening audit. And it has two parts to it. It has a budget where the department wants to know that they want to see the next 12 months of budget of the company. What is projected to come in from escrow fees? What is projected to come in from escrow openings and take into consideration possible cancelings and so on. And then what are going to be the projected expenses of the escrow company? Operating expenses, salaries for the officers, salaries for other people, office expenses, messenger, advertising, marketing, professional fees paid to lawyers and attorneys, promotion, um, what it thinks its insurance expenses are going to be, and so on, employee benefits. And they want to see the budget knowing that over the entire course of the next 12 months, based on the audit balance sheet that the department's going to receive with the opening audit, that the company will stay in compliance for the entire year, will not drop below any of the requirements for tangible net worth or liquid assets. The opening audit is a balance sheet. It's not a complete set of audit financial statements. It's just of the balance sheet because there's no operating going on yet. And so what we do, and as far as this engagement, we will know once the money has come into the bank account for your capital, and we'll verify with the attorney that the capital stock has been issued, that we will find out all the money that's been spent out of pocket by the owner, payable to us, payable to the EAFC for the $3,000, payable to the attorney for perhaps for incorporating the company, payable to the consulting for doing the application, whatever the costs have been. Maybe there's been a cost spent um, on furniture already or on a computer software program. We want to know about all the out of pocket so we can incorporate that into the opening balance sheet and to make sure that this opening audit will again be approved by the department, satisfy the application requirements, and allow you to move forward. And so that's what gets started relative to applying for the escrow license. What are other things to think about with regards to the application process? Or once the application has been submitted, what to think about? Insurance, getting workers' compensation insurance for employees, getting an office policy for the business, uh, trust accounting software. What software do you want to use? There are a lot of vendors out there. What's going to best meet your needs relative to being able to process escrow transactions and maintain and keep track of the money in the trust account? A payroll provider. How are you going to pay your employees? Is it something you're going to do yourself? Do you want to have an outside independent contractor, payroll company take care of it for you? Will they provide all the services you need relative to doing the payroll, paying the payroll taxes, doing the payroll tax returns? Do you need help with some of their HR um, practices relative to health insurance or basic retirement planning? There's all things that a payroll provider can do for you. Office space and lease considerations. How much office space do you need? What are the terms of the lease you want to have to take into consideration? We recommend people that if you're going to be negotiating a lease before your license is approved, you want there to be a provision in the lease that the lease will only move forward if you receive approval from the DFPI. Because otherwise, you don't want to be stuck with a 3-year lease or a 5-year lease and then find out your license hasn't been approved. That wouldn't be a good thing. The other thing to think about is in today's world with the ongoing audits and financial statements, there are these things known as the lease accounting standards, which means that the office lease itself, or a car lease, or an office equipment lease, any lease you sign will now be part of the balance sheet. And then current liabilities will be 12 months of lease payments. And if these 12 months of lease payments are significant, they may impact and perhaps negatively impact the balance sheet. And meaning with regard to the DFPI compliance requirements for liquidity. So you want to make sure you're talking with someone about the terms of the lease before you actually sign it, relative to how much you're going to need in the bank or how much you're going to need for capital, so that the lease itself does not negatively impact your balance sheet going forward. Staffing. How many people do you need? At what point do you hire more people? Do you want to find an escrow officer with the following? Do you want to find an escrow officer to develop internal because you already have leads coming in for the company? Cash flow and budgeting. What are the cash flows of the company? How to make sure you're going to be bringing in more than you're spending? How to keep an eye on the budget that's being presented over the course of perhaps what we call a rolling 12 months, that you keeping an eye on 12 months of what's going on. Um, what's your progno- prognosis for how the company is going to go forward? How are you going to project where the company is going to be? Um, we tell people that you want to try and plan by breaking even after 6 months. Figuring out what your monthly nut is. How does it work out? Where's your source of business coming from? All these different things that are going to impact what you want to consider in getting going with the starting of the escrow company. Again, work closely with your attorney, with the CPA firm, with outside consultants, with bankers who work with the escrow industry. There's a lot of people who touch what you do and can help you through this entire process and beyond after the licenses is the application's approved and you have your license, you start operating. So that's a mouthful on how to start your escrow company. It can be overwhelming at times, but it's also something that has great rewards to it as the escrow world will continue to thrive as the real estate cycle continues to improve. All the best as we complete this episode from Debits and Credits with Haas and Dawe. We'll see you next time.